Hi and welcome to the Trading Bell. Now we cross borders a little, but still having the conversation here locally with BK Group, and I'm speaking to the Group CEO, that is Dr. Uziel Daginjimana, and he will also be joined by Levi Gasagwa, the Bank of Kigali Business and Corporate Solutions Head, to have a discussion about how they're faring on right here and what is in it for investors who have actually invested, because this is actually a cross-listed company here at the Nairobi Securities Exchange. Let's get into the conversation. Gentlemen, welcome to the show.
Thank you for having us.
Excellent. There you have it. And we just want to have a picture of how they're doing, because they are cross-listed here. And so I'm sure for you investors, you'd also want to know how they're doing, what's in the offing and the likes. And I want to start with you, Dr. Uziel. As a group CEO, definitely you sit at a pivotal point where you are seeing the overall operation of the group. And you just released your results, which were quite impressive when I looked at the numbers. I think it was a 21.7 increase in profit after tax, which was commendable. I just wanted you to paint a picture. What drove to these great numbers for your bank?
Yeah, you're right. We had a very successful year, 2024, but it was really a continuation of high performance of the group, because even the previous year we had a very high growth. We had very good growth in revenues, both in the net income, net interest income from the loans we distribute, but also from non-funded income. Both grew by 15.3%.
Wow, that's very good.
We mobilized the deposits, which increased also by about 19%. And also, most importantly, we managed to contain our operating cost. So limiting it at 2.6% growth.
Wow.
So this also has helped us to reduce our cost to income. From 42% around to 38%.
I'm sure, still at you before I come to you later on, Levi. Still as a group CEO, you sit at a place where you're looking at all the macro environments, things that could affect your bank. When I speak to CEOs in our local banks here, and even regional banks, they're also concerned when the presidency of Trump comes on board and they're hitting levies, or when we have interest rates or currency stabilization. I don't know, from where you sit, what has been your key challenges when you look at the macros? How are they faring on?
Actually, our macroeconomic environment is very good. It is one of the drivers of our success as well.
Excellent.
So we had a very high growth. Our economy grew by 8.9%. It's the highest in Africa. But it's not one of achievement. It's really a sustained high growth, because the previous year we had 8.2, previous year 8.2, 2021 we had 11.9. So it's really a sustained high growth, which also translates into growth in the business activities, which create a good opportunity for our group and the other players on the market.
Thank you so much for that. Let me bring you in, Levi, and you sit at a place where you're looking at business and solutions for the corporates. And I wanted to bring in the element of digital banking offering. I'm sure you're doing your very best as well to ensure that your customers can as easily and as possible have easy access in their operations through digital means. So I wanted to ask you, how has this impacted these numbers that we're talking about in terms of the inclusion and customer experience?
Thank you very much. Indeed, in 2018, the bank embarked on a digital transformation journey, which made us improve, not only changing our core banking system to become a more nimble and add new solutions, and having digital channels that are on par with international standards. And we've seen our digital onboarding rates improving from 43% to 70% the last 2 years or so. And this also translated in a reduction of our costs, as we now reshuffle our sales, our branch teams to work
in sales centers, which
Yeah.
also boosted revenue. So we are very happy with the trend in digital onboarding, and we hope to achieve 80% by the end of 2025.
Okay. Since I asked the Group CEO 2 questions, I'm going to ask you one more. Let's talk about your non-performing loans. Every time I have conversations with banks here, they always try to ensure it is below the 2-digit figures so that at least they can manage it as much as possible. You are also offering a lot. When you go to digital, actually, it's more like a risky also environment the more you do this. How are your NPLs and how are they faring on?
Our we ended the year with a non-performing loan ratio of 3.2%.
Hold on. You said 3.2?
3.2%.
I've not had such low figures in a long time. But go ahead.
This speaks volume to our approach to have stringent credit underwriting, to have strong monitoring mechanism in place. It is 2% below the recommended 5% from our regulator, the National Bank of Rwanda. However, we believe that beyond the non-performing loan ratio, we are keen to reduce our cost of risk, to ensure that it also goes down, and we are aiming to reduce it by the in the realm of 1.5%.
Okay, lovely. I can't wait to bring you back, Dr. Ozio.
Digit.
Absolutely, yeah. I want to bring you in and ask you, just from a strategic point of view, because I am very impressed by such figures, such single digits. What is it that you're doing strategically to ensure that you're maintaining such operations and financial stability, even as you're offering all these offers to your customers and all that? Just to paint a color on your strategy.
Yeah, we have actually a new strategy of the group, which is also cascaded to all subsidiaries. We want to strengthen our human capacities by attracting, developing, and retaining top talent. We also are now accelerating our digitalization agenda, as Levi has just mentioned.
Absolutely.
So we are working on many products, many digital channels to access more customers, especially those at the bottom, to also to have a significant contribution to our financial inclusion. We are also strengthening synergies among our subsidiaries, because we are offering a range of services, from banking services through insurance. We have a general insurance company, we have a fintech company, we have a BK Capital, all offering financial services, but when with synergies and the opportunity for cross-selling of those products. So we can offer a package of services to the same customers out there.
Okay, lovely. I'm still going to ask you and dig deeper into that, because I have seen regional banks come in really fast in your forte, if I may say that. We have quite a number who speak about how they're performing in Rwanda, for example. Of course, you're cross-listed here, and I know part of your strategy, as you said, is expansion, both digitally, and I don't know about, you speak about the physical ones. I've seen customers still want to meet with their bankers, a lot of them. I don't know whether that's the same thing that is happening there. So speaking to that in terms of expansion, are you afraid of this regional guys coming there? Or are they welcome because probably you're also planning to do the same?
No, I think it's a good signal of the attractiveness of our market. So I've seen many Kenyan banks coming to Rwanda, and even recently, 2 of them acquired local banks to expand their size. But BK Group is still the largest on the market. Of course, competition is increasing, but the competition is healthy. It allows us also to perform better. And business opportunities on the market are still there. For example, our recent FinScope survey, which is a financial inclusion survey that we conduct every 4 years, indicate that we have achieved overall financial inclusion of 96% of the population. But the other population that are banked represent only 22%. Which means majority of them use mobile money and informal financial services. or non-banking services, so which indicate that there is a lot of room to grow.
Okay.
BK Group and the other even competing banks.
Absolutely.
So we still have opportunity on the local market.
Okay. Yeah. I'll come back to you, and I will come to ask you about how you are diversifying your income, because regionally here I've seen banks, most of them are even acquiring insurance and all that. Maybe you'll take me through that. But let me bring you back for a quick question here, Levi, and it's about the SME sector and the corporate banking that you really are the heart of. Financing these people really ensures that there's economic growth. As the group is here said, it's looking at how the country is doing in terms of the growth, it means there's something right happening. And so with such kind of growth, I'm sure there's an appetite for growth of corporates, growth of SMEs and all that. So I wanted to ask you, with this increase in terms of financing for these particular sectors, what initiatives are you doing to ensure that you keep the businesses going and supporting them, especially in the sectors of trade, agriculture, and I'm sure manufacturing? Yeah.